Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over the market, let's go over Tesla, let's figure out what is happening and what we can expect moving into October. It's going to be a spicy month, I think, and I think it'll be a pretty nice month, or rest of the year rather. So all that being said, let's jump into it. If you enjoyed, don't forget to hit that like button as it does help a lot. This is not financial advice and I am not a financial advisor. And of course, my membership section on YouTube is live. Link is down below for $3 a month. Essentially, you get my intraday thoughts on Tesla and whatnot, and sometimes other things as well, as the day is pretty much going live throughout the day as the market is trading. So moving into it though, Tesla down on the day about 2%, which is going to be putting us at about 246, almost $247 per share, which compared to the market isn't too shabby. In all honesty, not that bad. I mean, SPY down about 1.3% almost, but QQQ is down about 1.7%, almost the same as Tesla. So Tesla is doing, surprisingly, actually, it's holding its own. It really is, in my opinion, especially after missing delivery numbers, right? Obviously, a beautiful recovery yesterday and really not losing much steam at all. Like it hardly fell whatsoever post delivery numbers. So in my opinion, overall, what I'm trying to say is I think Tesla is actually holding on decently well. Now, can it continue doing that, or is it going to falter? Is it going to collapse? Is it going to crash? Is it going to skyrocket? Is the next leg up on its way? That's what we're going to be trying to figure out. So I think the most important thing, like probably, again, in my eyes at least, the most important thing to look at right now is going to be these three color lines right here. We have the 21 EMA at the top. In the middle, the orange one, of course, is the 50-day moving average. And the very bottom, we have the 100-day moving average. Essentially, what you want to be looking at right now is just waiting until one of these breaks. That's what I am personally doing. I bought back most of my options, and I'm starting a new option sell because I usually do it like per month, right? That's kind of how I do it. But nonetheless, I am starting to resell options. I have resold a put. And other than that, I'm completely chilling. I have no other options sold. I'm just holding my shares right now and just waiting to see where the next leg goes, right? So again, it's kind of simple at this point. In all honesty, like, does it break below the 100-day moving average, and especially 240, roughly 240 to 242? Well, that's going to be pretty bearish, especially if we break below this overall channel that we are in, which of course, if we break below the 100-day moving average and below 240, that's going to come down to retest the overall channel, which will probably put us somewhere around the 235-ish level. And that, of course, will be pretty bad, right? The 100-day moving average is currently sitting at about 244 almost dollars per share, which of course, it will slowly increase towards us very, very slowly at this rate. It will keep going up every single day. Of course, keep that in mind, right? Because of course we're above it, right? And on the vice versa, we have of course the 21 EMA and the 50-day moving average. The 21 EMA is currently sitting at about 252, and the 50-day moving average is sitting at about 250 and a half roughly, which also are going to continue coming down to us and slowly meeting us until we're pretty much like very much sandwiched in between these indicators. We already kind of are, but until we break into a direction, we're going to continue getting sandwiched, right? There's a lot of, in my opinion at least, steam building up in this situation, right? If we bring up the Bollinger Bands, you can see they're actually surprising. The Bollinger Bands don't look that tight. Like they actually look very normal here, which is surprising considering these moving averages are getting extremely tight and extremely close to each other. And at some point, something is going to give. It's just a matter of which one. So this is why I am personally right now being very patient. I'm not rushing for anything. I did actually buy a bit of shares today, almost at the bottom of the day. On my second account are about 244. I have it written down somewhere. I'll close the window because I obviously write down all my trades. But yeah, it's near the bottom, obviously not the very, very bottom, but I think it was around 245. I did buy some shares on my second account, about a third of that account, in case we do get that rally. I think there's a very real possibility, right? But that's kind of the main thing I'll be looking at. So like I said, if we break below the 100-day, expect a retest of the bottom of this channel, which is going to be putting us at somewhere around 235-ish. Again, give or take, it's not exactly 235.00. Obviously, could be a little less, could be a little bit higher, but generally around that price range. And of course, a break above these moving averages is going to have us retest this overall blue line, which is going to be this little downtrend that we started ever since we fell from this 280 level, right? We had a massive kind of crash over here. Now we're getting a bit of a potential dead cat bounce, right? Of course, this can be just a potential little dead cat bounce, and then we fall down further, right? Obviously a potential, but nonetheless, right? If we do break above, then the level we'll be testing next is going to be a little bit shy of 260, right? Like I said, it is going to continue moving downwards, and that price target that will hit potentially to retest that downtrend is obviously going to decrease every single day as this blue line is of course descending. That just kind of makes sense. So in this case, let's say in theory, if it happens tomorrow, it will be putting us at about 257 and a half, almost $258 per share. And of course, the longer it takes, the lower and lower this will get. Sometimes at some point, it'll probably get down to about 255 255, right? So keep that in mind, but that will be the level I would be expecting a retest if we break above the 50-day moving average and the 21 EMA. And if we can break above this will officially, in my opinion, break the downtrend that we started from this 280 level. And that'll be very, very good. That would be, fairly bullish for me. I would like to see that. And I think that would be something that the bulls definitely want to be seeing right now. So those are the main things I'm looking at. Like just kind of nice, quick, simple, without making it too complicated. Just really, that's what I'm looking at, right? The upside and to the downside, the levels that need to be broken to get to the next tier to retest, right? Like I said, first you have the moving averages, break above one of them, you go to that next level, right? Again, upside is this blue line, downside is the overall channel, and then we see how it reacts from there, because that's where it gets also extremely important. Now, let's talk about what happens if we break down below, ultimately, this overall ascending channel that we're in, which is going to be the bearish scenario. I don't think it'll happen, but if you just completely exclude it out of your mind and just throw it out and be like, yeah, that'll never happen, guaranteed 100%, in my opinion, you're delusional, right? You always need to consider both aspects. I don't care if you're a bear or if you're a bull, really could not care less. If you're completely ignoring the opposite side of what you personally believe in, for instance, if you're a bull and you're ignoring the bear side, you're just ignorant, right? So with that being said, let's take a look. So if we break below the 100-day moving average, we come down to retest this channel, and let's say overall, ultimately, we break down below it, right? We break down below it, we go below 235. Well, that's where things will start getting a little bit spooky, right? Mainly because we're breaking out of this channel. And if that were to happen, taking a look at the weekly chart, it'll be a little bit easier to kind of see. I think at the very least, we'll come down to 200, like minimum, right? And I wouldn't be surprised if it's a pretty sharp sell-off to the 200 level, which is going to be where the 50-day moving average is, of course, on the weekly time frame. Let me bring out the 200-day moving average, which is also actually sitting right at the 50-day moving average, right? The green line. So I wouldn't be surprised if it's a fairly sharp sell-off towards close to 200. Then from there, I wouldn't be surprised if we get a pretty nice bounce. So let me just not dictate. Let me show you how it's going to look like potentially. So something like this, where we come down somewhere around the low 200s, again, give or take, right? Somewhere around the low 200s, somewhere around here, right? Oops, I meant to double click that. Let me try that one more time. Somewhere like this, and then we bounce, probably come up to retest the breakdown. We'll see, of course, what happens. This absolutely can be a potential false breakdown. That's always a possibility. But assuming it's not, and assuming it follows like the expected path of such a situation, it would be something like this. And then we come down, and we probably come down somewhere to around the mid 100s is my guess. Somewhere maybe around 170s, maybe retest this blue line, right? But something like that. Unfortunately, what this also would mean is the fact that we're breaking below the 200-day moving average on the weekly, which isn't really good. That's not like super ideal, right? This was what happened here. You can see how sharp the sell-off continued after we broke down below it. And thankfully, we went back above it pretty quickly. So, it's not ideal. That would be a little bit kind of worrisome with all honesty, but that is a possibility that this plays out right here if we dump out of this overall channel. So take that for consideration, right? Or take it for what it's worth. That is important to understand. So that's what I will be seeing if that were to happen. Now on the flip side, let's say we break above these two moving averages, the 21 EMA, the 50-day moving average, and we break above this blue line. Phenomenal. What happens next? Well, in my opinion, the first and foremost will be the most important level is going to be, of course, coming up to somewhere around this kind of mid 270s, so as high as about $280. I think will be probably the level we'll get to, right? And there I think it'll be extremely important to see how it plays out, right? Because if we can break above that, and ultimately the main thing the bulls, in my opinion at least, really want to be seeing is they really want to be seeing a breakout above 300 is the ideal scenario. That will be like unquestionably bullish, because it's just a massive level, a psychological level. That's where we got rejected almost exactly on the dot on this situation over here, right? If we come out over on the weekly and we take out the Fibonacci from the overall swing high, which in this case was all-time highs, all the way down to this 100 level, you can see we got rejected right at 294, which is that 618 level. So to me personally, I really want to be breaking above the 618 Fibonacci level. And that to me would pretty much throw like the majority of bearish situations of us coming back down to like the low 100s or even maybe lower than that or anything. Like to me, those would get thrown out of the window for the foreseeable future, right? I wouldn't see that happening for a while, honestly, like at least a year, honestly, if not 2 years. You know what I mean? So that would be extremely important to me. But on top of that, another thing you can take a look at for the bullish scenario is if we do break above these averages and we start making our way potentially to the upside and to the potential bull case scenario, is this red line right here on the weekly, which I believe I have on the daily as well. If I zoom out, it'll show it. There it is, right? It's going to be, let me just remove these moving averages for now because it's a little bit messy, right? But I would be essentially looking at a breakout of this overall red line, which at the moment is sitting at somewhere around, again, also that same level I just talked about 275, 280, something like that, which is where this red line is sitting. Same thing on the weekly, essentially, right? Sitting somewhere around that 275 to 280-ish level. A break above that would be phenomenal, because that is the overall, the downtrend of all downtrends for Tesla, right? That is the downtrend. Like, if there's any downtrend to pay attention to, it is without question this one, this red line, because breaking above this completely eliminates this downtrend that we are technically still in since earnings, because again, we set an all-time high, then we just constantly set lower highs over and over and over. So until that pattern can break, we break above this red line, and especially break above 300 and set a higher high now, man, things should get reversed in a beautiful fashion. I personally think it is more likely that that does happen. I think there's a more likely chance that we do play out that bullish scenario than the bearish scenario. The chances are it's not substantially higher. It's like maybe 65, 70% chance I think the bullish scenario plays out. And of course, the rest of that percentage is about 30%-ish is going to be to the bearish side, right? But obviously, that doesn't mean you can disregard the bearish side as well. I have cash ready to go if the bearish side plays out, if we go back down to the mid 100s. If we don't, phenomenal. I will ride with what I got, right? That's the way I'm looking at it. But that's just my strategy. But that's kind of the main thing I'll be looking at. So this is kind of the overall, picture, if you will, that I am personally paying attention to, and I think is going to be very important to pay attention to. And that's how you want to be looking at Tesla stock moving forward for essentially, in my opinion, honestly, the rest of the year. So hopefully that helps out. Ladies and gentlemen, let's take a quick look at options flow before we end off this video and see how it's looking right now. It was looking a little bit bearish in the morning, but it's actually looking like it's slipping back to being bullish right now, which is great to see. It was definitely more bearish in the morning. It wasn't overwhelmingly bearish, but it was definitely more bearish than bullish. Nothing major though. But now it's kind of flipped, right? We have 1.4 million in premium and calls coming out over here as well. So bulls are definitely stepping in on this red day today. I did as well. Like I said, I pretty much exited all my positions. I exited my sold calls. I actually entered a sold put, which is a bullish position. And I also bought shares on my second account. So I am feeling a little bit bullish here. I won't lie. But with that being said, if we break below certain specific areas, like I just talked about, I will be looking to just sell calls against the shares once again, and then ride with that essentially. So, but yeah, that's what I'm seeing. So let me know what you think down below. Ladies and gentlemen, I do think there's a pretty decent move coming out soon. I hope it doesn't take until earnings. That will be kind of boring, but there's a possibility it does. But I do think there is a storm brewing for Tesla. Not necessarily a bad storm, just a storm. It could be a good storm or a bad storm. Depends on if it rains and storms in Bulls Village or in the Bears Village. That's the question. I think it'll storm in the Bears Village personally, but of course, we'll see. Again, as usual, if you enjoyed, don't forget to hit that like button. But yeah, thank you all so much for watching. See you tomorrow. Peace.